All right, good morning, everybody. It's Cowboy. It is 8:32 a.m. EST, and we had an exciting morning with Bitcoin. We're going to take a look at that price retraced, and it was based on some of the data that we talked about during the show yesterday. So we're going to review what that data was, how that data works, and how we can use that data to our advantage in trading. So I do want to take a moment though. We never really looked at the calendar for the week yesterday, which is something that we usually do at the beginning of the week. So I am going to go ahead and open the calendar and, we'll take a look at what's going on. And I'm talking about the economic calendar, everybody. So I'm going to throw a QR code up really quick here. So that way you can zap this. If you're interested in finding out more about what we do, you can zap that QR code or just go to algofactory.tech. And basically, we help people become traders. We help them build a trading plan. There's a lot more to it. And we'll talk about that towards the end of this live lab session. So I'll leave this up here for a moment. Let me share the screen. Give me just one moment. Okay. So we're going to take a look at the data for this week that's coming out, right? So this is forexfactory.com. There are other sites. I know that there are some traders who actually prefer a different solution to this. But I've been using this for a while. It seems to put out the news as I need it, right? There's a lot of news events that really don't have an effect on the markets. But if you're trading, and especially if you're day trading, you're going to want to know which events are coming that might affect, it might affect whatever the price is that you're trading. I mean, it's these wild moves that happen are often because of economic data that came out, and that economic data is predictable. It's like, hey, we know they're going to talk about this at this time, right? So, for example, today and about an hour and a half, they're going to do manufacturing PMI and JOLTS job openings. So, if I were in like a day trade, a trade that is, like a quick trade in and out, right? That might be affected pretty severely by this data, right? If this data came out and it was way different than expected, the market could take a turn that is, not something I expected. It just knocked me out of my trade, So knowing that this data is coming today is going to be most helpful. Excuse me, it's going to be most helpful. Now, the actual the big data comes out at noon, which is 2 p.m. EST, right? So 2 p.m. EST, you have the FOMC meeting minutes. So the FOMC was, I think it was, 2 weeks ago, if I'm not mistaken. And the FOMC is the Fed Open Market Committee, okay? And this is the big meeting that everybody looks at once a month. It used to be once a quarter before everything went crazy, COVID and all the madness. And then, of course, once everything goes crazy, then they just don't want it to go back. But the FOMC meeting is when they determine whether or not they're going to hike the interest rate, they're going to keep the Fed funds interest rate, where it is, or maybe cut it, right? There's been a lot of talk. It's like the biggest conversation in economics, right? Like in modern monetary economics, I should say. So the meeting minutes are the actual, so when the Fed Open Market Committee talks, they have a conversation, and at the end of that conversation, they go and have a big meeting, which was 2 weeks ago, and they explain what they're going to do and why. It's like, hey, we're going to cut the rate, or we're not going to cut the rate. And then they talk a little bit more about what they might do in the future. And the event was such that, about 2 weeks before that, so a month ago, Jerome Powell, the Fed chair, had said, it's not really time to talk about cutting rates yet. And then 2 weeks later at the Fed FOMC actual meeting and during the presser, it's like, well, we might want to start talking about cutting rates. And this really kind of threw the market for a loop because the market was not expecting this, right? So that being the case, the meeting minutes are going to give us sort of a look into what was said during the meeting prior to the announcement. That's what that is. For anybody who has not worked at a certain level in a company, minutes are where somebody records what's being said during these meetings, right? So anytime the board meets, they record everything and they write it down, and that's what minutes are. So they're going to reveal that to the public. Okay, so let's see. We got a couple of comments in our private room. Let's see what that's about. Okay, so Ray in our room said that Fed's barking sees likely soft landing ahead, but notes rate hikes still a possibility. Look, there's a lot of talk about what might happen, and the soft landing narrative is one that's being pushed. And so, a soft landing, what that means is basically everything went up for so long because rates were so cheap. I mean, rates were next to zero. And then a lot of money was injected into the economy, especially during COVID. And so you have a bit of inflation, right? You have a lot of money floating around, and then you have the prices of things going up because there's just a lot more money. Because money is not wealth, right? So when you put money into the economy and the same amount of goods and services are going around, things get more expensive, right? It's a very simple concept. So it's not like there's more goods and services. It's not like when you put more money in the economy, they're going to just like magically have more people, right? Like making things and doing things. It's just putting more money into the economy, right? So when you put more money chasing around the same amount of goods and services in a relative sense, everything just gets more expensive. But the problem is that people's wages have not gone up. So we're in a place called stagflation where prices are going up or at least not going down, and wages are not going up. So things are becoming expensive. And when that happens, people stop spending money. I'm seeing articles right now of like just going to Chipotle. Like a burrito was like $13, and then if you want extra protein, it's another $6. Like you're paying $20 for a burrito. When was a burrito ever worth more than $3? I mean, I know, I get it. They're more than that. You go to the, even at the cheap places, but a burrito is just beans and like, some meat and a tortilla. Like it shouldn't be more than $6 or $7 ever. But that's what's going on right now. Things are becoming expensive. And when that happens, eventually people will stop spending money at those places. They're going to cook at home. They're going to go to the store. And when that happens, people will start to lose their jobs because these companies, these restaurants will shut down. And that is one small example of what would happen across the entire economy, right? So the entire economy would essentially shut down if that were the case. That's just what happens. That's the bust cycle. You get the boom where everybody is productive. And then towards the end of that boom, you get kind of this situation where people don't want to work as much because they have a lot of money and they think they don't need to work. And a lot of money starts chasing the same goods around or even less goods and services. And then you get inflation. And then you get where people don't want to spend money. And then you get where everything falls apart for a while. And then everything goes back to kind of an equilibrium. So when you exacerbate that cycle by putting trillions of dollars into the economy for COVID, then of course you are heightening the boom cycle, and then you are also deepening the bust cycle because it's gravity, man. Everything approaches value over time. Over time, everything approaches value. The trick is what is the dollar worth at that time, right? So today is the FOMC, and that's kind of the backdrop of the FOMC and what matters. And again, they did a rate pause. They talked about cuts. You have some people, there's one Fed member, as Ray said, that talks about this soft landing and, maybe even rate hikes coming. And that's on CNBC, which CNBC is basically state media. So you have to watch out for them pushing a narrative, right? So that's always a concern when you're dealing with the mass media is, okay, are they saying this because they're like want people to think that? Or are they saying this, because they, I don't know, because it's true. So I doubt it. But we did see a pretty heavy treasury sell-off. We saw yields go up and treasuries get sold off. And again, that was over the Fed minutes. So I don't know if somebody knows something. But we actually covered this over on Twitter where you had this massive jump in treasuries that were like out of nowhere. I'll put it up on the chart. And then we'll talk about this Bitcoin chart right here too. That Bitcoin chart was brutal. Let me expand this so everybody's eyes don't fall out of their head. That's that view you're seeing right there is just That's a way that I get data really quick, but that's really hard to look at. Let's see here. This is gold. Let's take a look at treasuries. We'll see what's happened since. Let's go US daily. There we go. It's US Treasuries 10-year. Where is that one? 10-year daily. I had it up yesterday. 20-year, 10-year. Shoot. I had the ticker. Up yesterday. 60 days, 30 days, 90 days, weeks. Let's see if this shows up on this. Because there's, whoa, I don't even know what that is. Shoot, sorry, I had this up yesterday. I don't know what happened to that screen. We're going to come back to that subject. But basically yields shot up overnight and it was like really, really fast. It was remarkable. It shot up in, I want to say minutes or hours. And that usually is indication that things are going to be in trouble, at least for the near term. But we're going to look at Bitcoin instead because I just didn't have that prepared. Apologies. This move down in Bitcoin last night was brutal, and it's actually kind of it's brutal. I'm getting a note here from March that this might be possibly because people think the ETF won't get approved. This is a note from Matrix Port Interns. It's March was just putting it in our private channel. So this might be why we saw this move down. I did yesterday show on the chart why I thought it would happen as well. Price was sitting right up at this kind of resistance area. You had liquidity down below. Price just moved down towards that liquidity. But I'm going to read from March over here in our private group, who is reporting from Matrix Port Intern. The current 5-person voting commissioners' leadership critical for the ETF approval of the SEC is dominated by Democrats. SEC Chair Gensler is not embracing crypto in the US, and it might even be a very long shot to expect that he would vote to approve Bitcoin spot ETFs. An ETF would certainly enable crypto overall to take off, and based on Gensler's comments in December of 23, he still sees this industry in need of more stringent compliance. From a political perspective, there is no reason to approve a Bitcoin spot ETF that would legitimize Bitcoin as an alternative store of value. Gensler's a rat. He needs to go away. That's just my own addition to this article. Back to the article. Since traders started betting on an ETF approval in September 23, at least 14 billion of extra fiat and leverage has been deployed into crypto. Some of these flows might be associated with easier macro conditions as the Fed turned dovish. However, of those 14 billion of additional longs, 10 billion might be related to the ETF approval expectation. Let me parse that out a minute. So what this article is saying is that the ETF conversation has pushed a lot of money into Bitcoin, and since since September, $14 billion has gone into Bitcoin, whether it's through derivatives or spot, and they're suggesting that 10 billion of that 14 billion might be related to the ETF approval. So it's the lion's share. It would be like 2/3 of it, more than that. Okay, back to the article. If there is any denial by the SEC, we could see cascading liquidations as we expect most of the 5.1 billion in additional perpetual long Bitcoin futures to be unwound. We could see the Bitcoin prices declining by 20% very quickly and falling back to the 36 to 38K range. Yeah, that's reasonable. We'll look at that right now. I'll chart that out. And the last paragraph of the article says, suppose market participants have not heard of any approvals by Friday, January 5th, 2024. In that case, Matrix on Target recommends that traders hedge their long exposure by buying the 40,000 strike puts at the end of January, or even going outright short Bitcoin through options. Okay, so that's their recommendation. We don't make any recommendations. So what they're suggesting is that if the market hasn't heard of an approval by Friday, for some reason that might kind of cause the market to think it's not going to happen. Okay. Now if you go to X, you go on Twitter, you can see that I put a chart up that came from yesterday's live show. You can go to yesterday's live show as well. And there was liquidity in this region below, at the bottom here. Okay, and as you know, price went in and knocked that out. Now it might be that this move down was related to that. That could be. It might also be that just everything's falling, possibly because of the treasuries being, the yields going up and the big sell-off in that as well. I am kind of looking as we're talking. I'm not seeing anything specific. And you know what? I usually don't pay attention to the news as much for these kind of moves. It'll look, if a move happens like this, if you have what is this? So 46 to 41, that's like a 10% plus move. That was probably going to happen anyway, right? But the news might be the catalyst that pushed a move that was already going to happen. And I'm going to tell you right now, the way that this works, okay, the way that this works is that for a move in an asset that is a multi-billion-dollar asset like this, for a move to happen, the conditions have to be that it was probably going to happen anyway, but the news can push it along. Like, maybe the news gets people excited, and then whatever direction it was going to go anyway, people start to kind of move in that direction, and it compounds the movement. But very rarely is it ever going to be that news is big enough to push price in a direction that it was not going to go. And it is my opinion that news tends to be held off and released in the where it gets the most bang for its buck. Okay, so what I mean by that is news is going to possibly be where, if it was going to go down anyway, and it was right at that point where it was done going up from a technical standpoint, just by the charts alone, just by the metrics, reading the charts, it's at a resistance, it's been going up for so long. And I think if the quants can look at it and go, yeah, we think it's about time for it to fall, you can almost expect for there to be some bad news to come out, right? And being the case, I would not be surprised to hear by the end of the week, ETF not approved, right? And then we could see price cascade down. Now, that could be an opportunity. A lot, for those of you who are in Algo Factory or want to be, understand that we can short Bitcoin. Now, I know a lot of people who actually refuse to short Bitcoin. Shorting Bitcoin is, it can be dangerous. Bitcoin is known to punish the shorts, right? So basically, and what I mean by that is when people bet against Bitcoin going up, when people bet on it going down, right? I don't like to use the term bet, but, that's just it's easy to say it. So if people bet on Bitcoin going down, right? If they take a short, a lot of times Bitcoin will punish those people. It'll push up through that. It's a known thing. They're called stop runs, right? So it's a very common thing. It's there's so many people who love Bitcoin that pushing it up is an easy thing to do. And this could have been a stop run, right? So Bitcoin at this point was at a resistance. Now, there's always that chance it could go up, but metrically it was at a resistance and it was seeing some lower lows. High time frame is going to always be bullish with Bitcoin, like perpetually it seems. But what might have happened here was that price got pushed up, and I did say yesterday in the live show that this could be. It looked a little bit bull trappy, but that's you don't know it's a bull trap. I'm just saying it looked bull trappy where price got pushed up, and what that does is it gets a lot of people thinking, oh, it's going to go up again because Bitcoin goes up a lot. Like it's a very simple thing, and it gets people to panic into the into the asset. It gets people to panic buy like this, right? So once price kind of starts to do that, people start to panic into it. A lot of times what will happen is the smart money, the big money, who they certainly have enough money and pull and media power to push Bitcoin around, right? They go ahead and they have shorts right up in here, and they fill shorts, right? They use your move up to sell their longs, called exit liquidity. You are the exit liquidity. And then they fill shorts. And then that means that they now, because you pushed up, you gave them the opportunity to enter very large short orders, and now they will push the price down. and then they will take some profit here, and they might even just hold on to those shorts for longer. It depends on, what their metrics say, right? So a lot of that's based on liquidity, and we are going to take a brief look at that, and we're going to see if we can kind of figure out where price might go right now. We can base it on liquidity. So here's the Kingfisher.io. Yeah, I saw that, Ray. They smashed gold down. Let's see here. So we got, I'm going to get a credit or two if I can. Just do a quick spin. This is Kingfisher.io. They don't pay me anything. I'm not like a shill for them. I just really like their product. It's really good. You can get free credits like I'm doing. And essentially what you will be allowed to do is get liquidity maps. We'll come back to the spins here in a minute. Let me go ahead and grab a liquidity map for Bitcoin. So there's not a lot of liquidity to the top side. There's a ton of liquidity to the downside. Okay, so let me expand this. What you're looking at is where people's stop losses are. Okay, so if you have, like, if you went long at the current price, which is this green mark here, which is what, 42,000-ish, 43,000-ish, oh, there, 42.5. Then you're going to have stop losses or liquidations. And the liquidations and stop losses oftentimes are in the same area. So the people who like have a certain amount of leverage, maybe they're going 10x, I don't know. Their liquidations are kind of like around 39,000. There's a lot of liquidations sitting here at about 37.50, 37 to 38. And then you have a fair amount at 36, 35. You have a lot sitting about 34 and a ton at 30,000. Now that article from, what was it? Matrix, Port Intern. Here's the thing about it. Leverage gets cleared out of the market before anything's allowed to move. If you have an inordinate amount of leverage, right? If you have leverage that is way, way more than normal, this is something that will be taken out. Like, let's just say Bitcoin wanted to go up, right? Let's just say it was time for Bitcoin to go up. Well, here's the thing about it. The leverage will almost always get cleared out before Bitcoin goes up. So Bitcoin will go down to knock all these liquidations out before that happens. Almost always. There are times when it doesn't, but for the most part, that's how it is. And this has been building for months. These are people who have gone long, some of them like months ago, and they're just holding these longs, right? So Bitcoin eventually should be going down to knock these out. And that, you got leverage all the way down to 30. So all the way starting at like high 30s, all the way down to high 20s, really. That's where the leverage is. So if I were to aim at where this might go, I would use that data, right? Okay, so, and I would look at, basically this large move up. And I would use, we could actually map this impulse out. We could look at this as one large impulse, right? And then this is going back to like October. You really could go back a lot farther, but we'll just look at this one impulse right here. And there's a ton, of course, of liquidity down in this area from all of this trading. So you're going to find a lot of it. But this one impulse is what kind of matters right now. The most recent move up. We're going to look at that. And we're going to use the Fibonacci tool. There's, you could go all the way up to here for the impulse instead. You could take your impulse all the way up here, right? We might do that. It's not, I don't like it. It's not as clean, right? So, there's some theory behind that I'm not going to get into, but I'll mark out some of the fib levels. The 0.5 is not really a fib number, okay? Just so you know, it's just there because people like it. But you get the 382, 618, 786. And the 618 is going to be your golden ratio. I'll put two lines there just to be clear, okay? And the golden ratio is sitting at 33,000, and as far as the liquidity is concerned, let's see, 33,000. Yeah, there's a lot sitting right there, from 33,100 to 33,600. It's a lot of liquidity. It's might even be one of the bigger. It's between this one and this one. I think this is actually bigger. So 33.1 to 33.6 is a legit target from a liquidity standpoint. And this is 33.1. Where are you? Basically here, all the way up to here. That's the liquidity zone. That's where it is. The liquidity's right there. I mean, that's right there at the 618. So I'd be keeping an eye on that level for sure. The 382 is where price will stop if it wants to continue up. Usually, that's usually how that goes. If you have a big impulse and price goes to the 382 and then keeps going up, then that means it's a powerful move that will continue. But a 618 is kind of where it tends to go to, right? It's the magic ratio for fibs. Now, and it could also extend a little bit past that to the 786, but we're not going to worry about that now. I mean, there's liquidity there for sure. If you look at the map, there's a lot of liquidity there at the 786. That's not to be ignored. I mean, look at that, 30,000. That's where most of the liquidity is. It's at 786. Like, you have a big fat liquidity, right around this bottom line. So I'm not ignoring that by any means. But let's go ahead. I'm talking about short-term targets at this point, right? Like, and I say short-term, I mean like weeks right now. So midterm, short-term, however your, language is. Also, there's a lot of liquidity on this move up. There's a ton of liquidity from a past trading standpoint. There's a lot at the 382, right? You see this from 36.9 to say 37.6. There's a lot of liquidity up in that area around this 382, and then you have this right here at the 786, right? But if we were to extend this liquidity profile back to include all this action down here, you'll see that most of it is down, sitting in the mid 20s. Now, I did call at 1.4 move to the mid 20s, but I'm not sure at this point if it's going to make it all the way down there. I mean, it could easily make it all the way down there. It would have to do with, I think it would be kind of a wider, kind of traditional finance crash that might cause price to go down to the 20s. I mean, shoot, it could go anywhere. I mean, the yearly low last year was like around 15,000. So 15,000 it's in play. I don't think it's as good of a probability. I think right now, looking at the most recent move, looking at the most recent impulse, the odds are kind of sitting around this 33,000 right now. And then from there, I might kind of say, okay, is it going to go down or up, right? But this move up was gargantuan, and a lot of it had to do with broader conditions. I mean, the whole S&P went up, all the indexes went up. The whole market went up during this time. Bitcoin kind of followed along. And this was a time when Bitcoin usually goes up on its own anyway. So, you have a scenario where Bitcoin it's going to usually go up anyway. The rest of the market was going up. You had the Santa rally. So, now what goes up must come down. The question is will it continue up? It could. I mean, shoot, I can make a case for it to go up to, 48,000 easily. And it might do that. What it might do is run up and grab 48 before it goes down. But right now, there's not a lot of liquidity up there. So I'm not really betting on it yet. But if price starts to head up, then I will reassess. But if I were just to kind of guess what might happen, price might lurk in this area for a minute and then eventually make its way down to 33. That's what I think is going to happen. But as price action changes what's happening on the chart, I will reassess, right? I don't just say something's going to happen and then I'm like, I go away for a week. I continue to watch, and as certain levels get broken or reclaimed, then I go ahead and say, okay, yeah, this is the new thing. But right now, yeah, I'm looking at price making its way down, and the FOMC minutes might be the catalyst. There are going to be a lot of events coming out this month, but the FOMC minutes might be what happens. So, all right, look, we're at the end. Yeah, Jay Martin says hammer time. That's so funny. Bonnet, hey, good to have you on. Thank you for coming, man. It's one of my Twitter buddies. So thank you all. We're gonna end the this live lab session here on YouTube. We're gonna hop over to the private session, but please like, subscribe, notification bell, all those things. We're on here Monday through Friday, and we're on at 8:30 a.m. EST. And then follow me over at X too, X aka Twitter. A lot of good info comes out over on X. But if you want the real deal, if you want the straight dope, then go ahead over to www.algofactory.tech and subscribe. That's what you want to do. All right. Thanks for coming on.